Good morning, traders. This is Michael coming to you from GammaEdge on Monday, May 5th with a pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index. We add a time series to this to give us an overall trend of what is occurring in the market. You can look up the tick index at your favorite investing website. But the short-term takeaway is this is buying versus selling from market participants. If there's more buying, obviously the tick index would be rising. If there's more selling, the tick index would be dropping. We continue to see the market trend model in a bullish state. This bolded white line here is our cumulative tick. That's basically our intraday aggregate of buying versus selling of market participants. And as we spoke about the past few days to weeks, it continues to the upside from lower left to upper right, indicating that buyers are in control of the overall market. And we're starting to look at this other indicator here for our market trend model. This is our colored ribbon. This is a longer look back period for longer term positioning in the overall market. And it continues to change to a positive slope. And we'll discuss our ARCX, which is the Amex, NASDAQ, and New York Stock Exchange on the next slide. That has also triggered to the upside in a positive fashion. So looking at the new highs versus new lows is our breadth indicator. We continue to see the new highs outpace new lows, indicating more stocks are being bought than sold. And then our filtered cumulative tick, this is plus 1,000, minus 1,000 filtered larger block orders from institutions or larger market participants, continues to ride above zero. Obviously, Friday was just a grinding type day. But if you look back multiple days here into last week, we saw significant institutional accumulation on multiple days. Where we would start out a little bit weak, but then buyers stepped in towards the end of the day. So that's the look you want to have if you want to continue the sustained upside move. Moving on to our ARCX, this is what we use for our back testing market trend model, as well as our mechanical portfolio, our P-Trans to PGEX portfolio that we execute every day. And this is basically the look that we want to have if you're a bullish market participant for a longer term sustained multi-day, multi-week move. The red is moving above the cyan, and we're starting to slope in a positive fashion. So when we get this, we call this a ribbon flip. This triggers a whole other set of indications and indicators for us that we can start putting capital to work in the market. Obviously, progressive exposure, and we want to see this bolded CT maintained above the moving averages up here. Historically, what happens is we'll have a 1 to 3 or a 5 to 7 day move to the upside. We're coming into day 12, I believe, on this longer term move to the upside. And then what will historically happen is the bolded CT will usually flatten out. We'll get some sort of consolidation with price. And then we may even move back below these moving averages and come back down and retest this colored ribbon area. And obviously, we want to stay above the colored ribbon to maintain that bullish state and positive slope for our longer term indications. So we'll continue to watch this day over day. But flattening and a pullback to the colored ribbon is historically been a bullish time to get involved in the market if our sentiment, structure, and trend stays intact. So moving on to the SPXA, this is obviously our cruise ship positioning of the SPX options complex. We look at the SPX options complex because it's the most liquid and widely used. This SPXA, we separate it, the SPX to SPXA expiries, AM expiries, and PM expiries. These are monthly and quarterly longer term expiries. These contracts don't turn over as much. So this is obviously institutional positioning with a significant net notional value of the overall market. We are now call dominated. This was lagging the past week, staying put dominated, but we are call dominated on the gamma condition. Basically, this is just indicating that in the money calls, or out of the money and in the money call speculation is taking control of the overall options complex, as denoted here by the net delta column. You see obviously significant more green than you do red. We do still have some in the money puts overhead. This obviously can provide a headwind until these erode or we get to an expiry or they're mechanically closed, which usually doesn't happen overall. So again, you're noticing that the reds continue to change to greens. This means out of the money call speculation is coming in, taking over those in the money puts. And obviously, if you want to have sustained price move to the upside, this needs to turn completely green, and that will help us drive up towards the 5,800 level. As we're discussing, significant headwind now with these in the money puts overhead, but we do have supportive type action with the in the money calls below us, significant tailwind here, significant headwind here. So basically we'll be locked between this area until something changes in the overall structure. So any pullback is an opportunity to get involved in the market for now, as long as we stay above this 5,600 key important level of out of the money, in the money calls, as we've denoted with this gradient here. So we'll continue to watch that area as a key level to hold on any pullbacks and get involved in the overall market. The SPXA delta balance history, we've added some commentary here, so you can pause your player and check this out. But basically, this is a separation of the right-hand plane market speculation as well as the left-hand plane market speculation above and below spot price. The green is the right-hand plane. This is what we call our out of the money speculation. To the upside, obviously, if it's a positive slope, as we've noted here, this indicates bullishness as out of the money call speculation is coming into the overall structure and complex. And then the red is the left-hand plane, that is below spot price. Obviously, positive slope here, indicating that in the money calls are in control and above the zero line. And that would be obviously a bullish state. And then the delta balance is the aggregate of both of those. Obviously, staying above zero and trending towards one means total call speculation is maintaining control of the structure. If any of these start to drop and turn towards a negative slope, that would indicate waning call speculation and possible increase of out of the money put speculation. So obviously that would be a consolidation or stalling type look for the delta balance that we would continue to watch. As of now, positive slopes on both, indicating bullish states, and then projected on out in time. This is kind of our crystal ball of market positioning. Delta balance stays above zero and trends towards one, indicating that the market participants are increasing slightly the call speculation of the overall SPXA complex, which is bullish. Moving on to the SPXP, this is our cigarette boat, obviously 0DT expiries as well as weekly expiries. These contracts turn over significantly faster than the SPXA, so that's why we like to watch these for our 0DTE or swing intraday or swing positioning for 1 to 3 to 5 to 7 days. Call dominated on this structure as it has been for the past week. Again, obviously indicated by the green positive net delta here. COI is up here at 5,800. Obviously, that seems to be and most likely is out of reach for today. That's the highest call speculation or call open interest to the upside. So keep that level in mind. If we continue to maintain that COI level up there at 5,800, that may be an area where out of the money call speculators are targeting. Obviously, we do have a little bit of in the money puts overhead, but not much. And you'll notice that our COTMP and COTMC labels are here. Obviously, this is areas where we watch for possible profit taking or supportive type action. Our implied open at the moment is 56.35, 56.40. The key takeaway is that we'll be gapping down into highly call dominated in the money call dominated environment here that can be supportive, but we also will be gapping below these in the money calls here that will provide a headwind throughout the day as the charm continues to grow if we stay below those in the money call levels. 5,600 here, we've denoted major confluence on the SPXA as well as the SPXP. We need to stay above that level to be bullish for the day. I would anticipate any pullback down into that area may be an opportunity to get involved to the upside as long as we maintain the MTM. And we'll be checking out our intraday command, which is our volume command, which indicates the mass of where market participants are transacting options contracts. Key tool to watch intraday to see if we're in a positive slope, which would be out of the money call speculation, or negative slope, which would be put speculation to the downside. Sorry about that. So 5,600 key level to stay above, obviously. And then we'll continue to watch these areas to the downside that are in the money calls that will most likely be supportive. If we get below 5,600, could anticipate some slightly more weakness. We may be a little more cautionary on the long side, at least from an intraday standpoint. Back to the 0DTE, obviously call dominated here. Expected move 85 points, still a little bit higher volatility. Total LOI is 212,000, a little bit lower on the lower side for a Monday. Obviously, leading up into the Fed on Wednesday. Most likely anticipate some choppiness type action until we get through that news. We've drawn the drunken sailor range here, 56.35 up to 56.90, and then our expected move here, obviously a larger expected move. Implied open is really in the middle of the DEX transition. That's this blue box right here. And then we have an unambiguous GEX transition overhead that's most likely going to cause a headwind. for us at the moment, unless we get above that, and then obviously move up towards the 5,700 and 5,725 level. And then 5760, 5785 up here, I would anticipate that most likely will be off the table unless we get some significant news event coming in today. And then 5600, we would lose that DEX transition there. So most likely, as we talked about, we'd be a little bit more cautious as a move down towards the 5550 level. And that would most likely be supportive as we have significant in the money calls below us. That will be supportive type action as the day goes on, as long as we're above it. And then again, gapping down, these in the money calls will now be out of the money and most likely provide a headwind overhead. Again, if we stay below that transition level and really around 5690 to 5700. And then just a reminder that we'll be within the drunken sailor range if we're chopping back and forth. So obviously a little bit more volatile. So you see these low exposure areas here. Price can move very fast through those levels. So again, minimal risk trading plan is the theme of the day. Obviously, if you're doing 0DT, you need to be butt in the seat and have a risk management plan in place. Moving on to the SPXP, this is obviously delta balance. We've already went through the SPXA and discussed that and what this means. You'll notice the SPXP actually has a little bit of a negative slope here. So this could be some of that bullishness coming out of the overall structure, and as we're seeing gap down now. So a headwind may be in place for a significant move to the upside for today, as well as choppiness type price action. SPY maintaining a bullish slope, positive slope on the right-hand plane. That's out of the money call speculation, but losing some of the in-the-money calls below us. Again, just can be from profit taking or closing, not necessarily, or some puts obviously opening out of the money put speculation, but delta balance maintaining one, so that's still bullish. So as we discussed, maybe a choppy type consolidation look from the overall delta balance and option structure. Net stack command, this is obviously a highest sensitivity strikes. We forced this spot price to 56.39, which may be a possible area where we're open. So to the downside, I've discussed the 55.50 as well as the 5600, and to the upside, obviously significantly above us, 57.15, 56.90, 56.90. So I'd give this the 5700 level to the upside. That could provide a headwind if we move up to that level. Most likely some stalling and consolidation, unless we see a significant amount of out of the money calls coming in via the volume command, and the MTM model continues to the upside with our CT. So moving on to thesis for today, closing in on the end of this, obviously. Drunken sailor range is here, 0 gex 56.75. We've already talked about opening at 56.35. This would be the bottom of the drunken sailor range. If we lose this range, then I'd be a little bit more cautious for a move down towards the 5600, which we've already discussed. And to the upside, I'm not really anticipating us to get above 5,700 unless we have a significant amount of out of the money call speculation coming in, or possibly some news event. I think this kind of price area from Friday will most likely keep a lid from a TA's perspective, as well as an option structure perspective. Also, remember those in the money calls that were up here will now be out of the money with the large gap down, and most likely will provide a headwind overhead, as well as the in the money puts that we still have above us. So with that, everybody make it a great day, and we'll see you in the Discord in a few minutes. Thanks.